Hello, how do you do your daily swing trading chart analysis of upward large cap stocks if you are using long option long swing trading strategy? You will use daily chart to do your chart analysis to buy and sell stocks. It can be either maximum daily chart or 1 year daily chart, but we are going to use maximum daily chart, and you will have a watch list of stocks that you handpick filters, stocks that you can invest in long term to swing trade, and you analyze them on a daily basis. We are going to analyze few from this list today, March 21, 2025, to see how they perform on while the market was open on March 20th, 2025. The first one is PCAR. So PCAR, yesterday the price went down. There was a pullback. The purple line is where we like to buy. Although we purchased PCAR before on right there, shortly before it reached a high there, and it pulled back on us ever since. So when it was close to this trend line here, we bought it again. But yesterday the price went down. The ending price, the closing price is colored in red on the y axis, and a red bar means the price at the closing of the day was lower than the price in the morning at the opening of the day, and a green bar means the price at the end of the day was higher than the price in the morning at the opening of the market. The price went up that day, the price dropped yesterday. So we bought it again, but you can see after we purchased it, the day we purchased it, the green bar, we tend to purchase it on green bar days, but it became red by the time the markets closed. We look for higher lows, and this was the low before that day, and it was higher than this one, which was higher than this one, and we made a purchase. But as you can see, it pulled back to the trend line, went up, pulled back down again, went up, and is still going down. So we'll just continue checking it, and this is the lowest trend line that we have for it. Therefore, it may not go too low before it start going up, or maybe there is a lower line that we should have traced. I'm not sure. I'm not seeing any tall mountain in the past, so this line was the only line we chose to buy at. And since we traded in 2024 using short option launching trading strategy and purchase it, those are the arrows at the bottom, and sold it at the arrows at the top, and we bought it again, and it pulled back on us. When it reached the trend line that we like to buy at the valley, we bought it again, but we will wait until it's higher up past the first purchase before we sell it for profit. So it is negative in our account for the meantime. PJ is the second one we are going to analyze. And PJ, we like to buy at this trend line. That's our entry point. So long option long swing trading strategy consists of you opening your chart of the stocks you want to swing trade and trace long option line or option lines or support lines passing by the lows, and pick long trend lines longer than 1 year time frame. The x-axis has the dates. Those are the year lines. It needs to cross it, be longer than 1 year time frame for me to consider as a long trend line. And you pick the lines to be your entry point, the lines that you saw the stock touch base with a few times or multiple times in the past, the lines that you are comfortable buying on, the lines that you are confident that there is a chance the stocks will pull back to use it as a valley before going back up to create another mountain. And you compare the chart, you do your chart analysis on a daily basis to compare where the price is to where you want to buy it. And that is how you determine your entry point. So right now, yesterday the price went down, but it's far from where we want to buy. The next one we are going to analyze is PCAR. So PCAR, we like to buy at this trend line or this one. Although if you see in the past, it does not create a tall mountain away from the trend line. Therefore, this trend line could well be the new trend line for it, because from there, if it has to come down here, it will be a huge mountain, which we have not seen in the past. So it seems to me that this sharp could be the new trend line for it. But either way, we have both, and we are going to keep extending them as we go along. And to extend your trend line, you keep your starting point and your second point the same, and you just extend it. So here it crossed that area, but I'm fine with it. This one we purchase it at the trend line, and again, to purchase it for the first time, we apply our rule of higher lows. So if you compare this pullback, lows are the red bars delimited by the green, which is price going up. This is higher than this low, which is higher than this low. So we have an uptrend line there going on, and we bought it at the first green bar that follow a pullback. It went up. We are hoping to sell it at a new high. So it went up and it reached a new high somewhere here. In fact, it reached a new high the day prior, and we sold it the following day. I don't think we sold it the following day. I think this is just a little bit on the side. And then, but guess what? It pulled back a little bit, went up, pulled back a little bit, went up, pulled back, but it's still going up. And pretty much from that point on, it reached new high every few days, you see, because we are trading upward. Large cap stocks, they reach new high often or frequently. It pulled back down here and reach another new high, and now it's pulling back. So we are going to keep an eye on it. When it reaches this line, we will buy it again. We may not even wait for to have higher lows there, or we might, I'm not sure, but we will keep an eye on it. Yesterday the price went up. We have a green bar there. So when you buy at the trend line and you like to sell it for the long option swing trading strategy, and depend on the type of stocks you are swing trading, in this case upward stocks, more precisely upward large cap stocks, knowing that they reach a new high frequently, we set a new high to be our exit point. Therefore, when it reach a new high here, we sold it. But again, before you exit, it's a good idea to check how it behaved previously at a new high. And as you can see, when it reach a new high, let's see, to do that you'll have to see the last time it touched base with the trend line. So it reached a new high multiple times. You see, it reached a new high multiple times. This is the previous high, so anything above that will be a new high before it pulled back. So from there to probably this area before it start going down, you will see how many time the time frame, and using that you can decide if at the first new high if you should get out or stay in it for a few more. But now stay in it too long for that to start pulling back on you. And as you can see, staying in it too long, it could pull back on us. Right now is below where we sold it, but if we could have stayed in a few times as well, but again, from where we bought it, where we sold it to this area, may not be much of a difference. I don't know, but $10 a share difference. But yeah, that is how you determine your exit point, or you can use a percentage, 5%, 10% from where you bought it. When you reach that return for you, you can sell it as well. It's not about maximizing the profit, it's about locking in some profit. But again, tailor the strategy to match your personality type. If you are competitive, which is an ability as well for orange color personality, orange color type people, if orange color is the first or the second color in your personality, you might be competitive. And being competitive, you might want it to win everything you put your mind into doing. I'm not competitive. I'm green and gold for the first two color personality of mine. Therefore, I set goal and I reach it. I don't compare myself to others and outdo them. That's how the US culture is. And that allows the country to continue moving forward and exceed. And but again, not everybody is competitive. Competitiveness means you are comparing yourself to somebody and you are trying to outdo them. It's not the strategy I'm teaching, because it's not who I am, but does not mean it does not work. You just have to see who you are and tailor the strategy you are using to match who you are, so that you are comfortable in your skin using that strategy to make money. For me, it's not about locking in all the profits, it's more about locking in some profits. Instead of investing in the stock long term and growing your money at the support line, which is tilted as well because it's upward stock, growth stocks, I choose to cash flow the fluctuation away from the trend line. So you can choose long-term investment type of stocks to swing trade, to make sure you are swing trading strong stocks, so that if you buy at the wrong place and the price pull back on you, you just don't worry, panic, but you just leave the negative stocks in your portfolio until it becomes positive again, and you can sell it. Therefore, be careful, handpick stocks for your watch list, and use the strategy to swing trade and create your watch list until you have a final product over time that is well suited for the strategy you are using. It's not the stocks you are going to change to match the strategy you are using. It's about choosing the right strategy for the right stocks that you want to swing trade. But it might take you a while to find that combination. So once a year, you can create your watch list to take out stocks that you flag that didn't work well with the strategy you are using, and go through your master list of stocks, go to swing trade to replace them with the one you didn't swing trade, so that you have a list of numbers of stocks that you can swing trade within, and you can analyze within an hour every day, and keep creating the few times a year to have a good stocks over time on your list to swing trade that works well with the strategy you pick and took time to customize to meet your personality type and your risk tolerance. As for the way I'm doing it, I'm trying to lock in some profit. So not knowing when it's going to really pull back on us, we still need to compare when we are close to exit to how it happened before, and based on how low we bought it, we can decide that the first high may not be the only one, and stay in the trade longer. Does that make sense? But if you bought a little bit higher up already, maybe getting out early might be a better option. But again, it's not written on stone. You have to be flexible, changing the rule based on the situation you have in front of you, based on the stocks, based on when you enter the trade, and so forth. So the next one we are going to analyze is PH, and PH is an example of a stocks you purchase, and you purchase it at the wrong place. We come across one before as well, PCAR, that we bought and bought it again. So PH, we traded multiple times, you see, bought it a few days later, sold it, bought it a few days later, sold it. I don't know why this is here. Maybe I tried to sell it, but it didn't, the transaction didn't go through, which is one thing as well. And then I sent the trade and sold it again. Okay, so but we bought it, we sold it, we bought it, we sold it, we bought it again, and we got a stranded there. For some reason it reached a new high here, and I thought maybe it was not a good enough of profit for me. It will continue, but guess what? This was not the lowest trend line for it, but it's just the far side of wall of the mountain. Therefore, it reached that peak and it pulled back. It didn't come back to this one though. Pull back to here and start going up again. So we are stuck in it. It's negative in our portfolio because where the price is right now is lower than where we bought it. You see the price when I put my mouse on certain bar. So, and it is in the portfolio, and you can see where we bought it in 2024, precisely in November. Okay, so the next one is PH will be the last one in this video that we are going to analyze, and that's how we do our chart analysis to see how the stock performed during the day when the market was open. That means you do your chart analysis at the end of the day, after the market closed or early in the morning before it opens again, to see how it performed compared to where you want to buy it. And when you bought it already, then you compare where the price is to where you want to sell it, the next high, and so forth. Thank you so much for your time. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money, just as small, one share at a time, $300 per trade, $100 per trade. If that's high enough to meet the requirement, the minimum requirement to open a brokerage account or a Roth IRA account, if you have a job with a reputable brokerage firm, that's good enough. If that is high enough to pay for one share of a stock on your watch list that you're interested in swing trading, that's all you need. Start with one share using long up to long swing trading strategy. If you buy it at a long trend line, which tend to be kind of low as well, and you are selling it at the next high, for instance, even with one share, you'll have a lot of profits in it. You just start small to try the strategy you are using with the stocks that you pick to swing trade, to see if they align with each other, and create your watch list to find stocks that goes well with the strategy you are using. And once you create your watch list to what you are comfortable trading, and you have the strategy well customized to your liking, to scale your profit, increase your profit, you just buy more share by adding more money to your account, by growing the profit you are earning as well. Does that make sense? Just that small. It's not getting rich quick type of things. Just that small, and grow your account from there. And swing trading large cap as a new a beginner swing trader allows you to have time to take an action without the stock fluctuating quickly on you, and you are not going to lose a lot of money very quickly. You are not going to make a lot of money very quickly either. They are stable companies, but after you are very good with them, then you can try to have a watch list of mid cap stocks, a watch list of small cap stocks, and and try them over time and see if you prefer to have a watch list of a combination of all those different type of market capitalization type of stocks in one watch list that comprise of large, mid, and small combined. For you to analyze within an hour every day, you have time to do that. Just that small, and over time, hopefully that is the goal. Your profit from your swing trading will be high enough to exceed how much you need for your monthly expenses, your household expenses a month, and over time be higher than your paycheck as well. That way your profit from swing trading can support your lifestyle, while your paycheck from your hard-earned money job fund your swing trade account. Thank you. For ideas on how to create your own watch list, will you please check the video playlist in the description of this video. We have multiple playlists to catalog those swing trading related videos, and we have one for swing trading as well, for watch list as well. Thank you.